Today my topic for with discussion with you would be structure of Reserve Bank of India. What is Reserve Bank of India? That we have already talked about in some of the previous sessions. That means we have already spoken that it is a central bank which was established on 1st April 1935 under the RBI Act 1934. Its headquarter is in Mumbai, Maharashtra, and currently Mr. Urjit Patel is the governor of RBI, and it is having 22 regional offices. Most of them are state capitals. In our previous sessions, we also spoke about the banking structure in the country, and in which we clearly saw that Reserve Bank of India is the apex body which is regulating and controlling the banking operations in India, whether they are related to commercial banks, cooperative banks and development banks. We have already seen that commercial banks and cooperative banks directly deal with public deposits, whereas the development banks are talking about the development of a specific area or the country. The organization structure of Reserve Bank of India is actually given by this particular triangle. We can very well see that number of the people at the top are less like any hierarchical structure, and it increases pan-India as the hierarchy goes down. So when I talk about the organization structure of Reserve Bank of India, it is governed by the Central Board of Directors. Now this board is appointed by the Government of India in keeping with the RBI Act. The Central Board of Directors consists of 20 members, and these 20 members are 1 governor, 4 deputy governors and 15 executive directors. We can very well see this the topmost portion of Central Board of Directors consist of the people from the lower 2 segments: governor, deputy governors and executive directors. Now these people, 14 in executive directors, 4 in deputy governors and 1 governor, 15 executive directors, 4 deputy governors and 1 governor constitute 20-member Central Board of Directors. Below this, we have local boards, 1 each for the 4 regions of the country in Mumbai, Calcutta, Chennai and New Delhi. They consist of 5 members each and appointed by the central government for the term of 4 years. It is to be noted here that anybody who is at the top level of the Reserve Bank of India organization structure is being appointed by central government. That means when we talk about the monetary policy or the economic condition of the country, we can very well see the government has a big role to play in here. RBI cannot be secluded or kept aloof from the decisions of the central government, because the appointments here are being made by the central government only. The objectives of RBI. Why RBI was established? Because to manage the monetary and credit system of the country. We all know that the total money supply and flow of the money in the country is maintained through Reserve Bank of India only, through our banking system. And anything which is not in our banking system, which is not recorded in the banking system or in the transactions which are being recorded by the organization, that creates a shadow economy. So the monetary and credit system regulated by RBI. To stabilize the internal and external value of rupee, we all know that dealing with the international economy and international transaction related to countries or related to businesses, wherever the money for the other country the flow has to be maintained, it will be done through RBI only. So Whenever there is a pressure on rupee, the value of the rupee decreases. It is only Reserve Bank of India which comes into the picture and ease out that pressure. For balanced and systematic development of the banking in the country, Reserve Bank of India ensure that each and every segment of our economy, each and every area of our country is banked properly. And what schemes can be launched for that, what kind of incentives can be introduced for that, that is being ensured by Reserve Bank of India. For the development of the organized money market in the country, money market is the place where we get short-term money. That means if I have money requirement for my business and the requirement is for a very short duration, maybe a few days or a few months, in that case money market is the right place to arrange that money. The regulation of RBI is the regulation of the money market is being done by Reserve Bank of India. The way regulation of the capital market for long-term finance is being done by SEBI, Securities Exchange Board of India. Now, for proper arrangement of agriculture finance, we have been hearing this for quite some time that India is an agricultural country. Agriculture is the backbone of our country. Though in last 5 years the situation has started changing, but still agriculture forms the major portion of GDP in our country, and that is why agriculture finance also plays a pivotal role in our development. How that can be easily accessed by the farmers and the people who are involved with the agriculture, the schemes are being launched by RBI only. For proper arrangement of industrial finance, we talked about the development banks. What were the development banks? They were the financial institutions which are primarily providing credit for industrial development of the country. So the regulation and the schemes for them are also being regulated and launched by RBI. For proper management of public debt, whenever the government is talking about the debt from the public in any form, that is being managed by RBI only. To establish monetary relations with other countries of the world and international financial institution, we have already talked about that whenever the money dealing with other countries takes place, it is only RBI which can deal with that. For example, if some assistance is to be taken from IMF or from World Bank, it would be only RBI body which will be intermediating that particular transaction. Without their intervention, it cannot be done. For centralization of cash reserves of commercial banks, we will be talking about that in detail, that to ensure liquidity with commercial banks, certain restrictions are there. These restrictions are in the form of cash reserve ratios and statutory liquidity ratio. Out of that, the CRR, cash reserve ratio, is the cash portion, cash component of the banks which is to be maintained with Reserve Bank of India in case of scheduled banks. So the centralization of these these cash reserve is being done by RBI. To maintain balance between the demand and supply of the currency, that RBI has to ensure that currency is not depreciating because of the demand and supply condition. And we have seen in 2016 only that because of these kind of pressures, these kind of mismatches, we had to take a radical step of demonetization also. So these are the objectives which are in front of us, which are actually clearly mentioning why there was a requirement of a central bank, what kind of function it must be performing. But we will be talking about the functions in detail in the next session. Thank you.